Let's bring in today's market panel. Scott Martin from Kingsview Asset Management and Jonathan Honig from Capitalist Pig Hedge Fund. They are both Fox News contributors. I'm happy to say so. Jonathan, I love David Stockman. I agree with a lot of what he says about the Fed, but he's been saying it for a long time. And about these bubbles, he's beginning to sound a little like Chicken Little, is he not?
I think he's absolutely right, David. I mean, we know that the Fed is an instrument of politics. The Federal Reserve officials are appointed by the president.
No question.
The mandate is from Congress. So I think that, and what are we even talking about, David, in terms of our analysis of the market? Not so much new products or new innovations anymore, but specifically what the Fed's doing.
When is the bubble going to pop, Jonathan? Quickly.
David, if I knew that, keep an eye on high-yield bonds.
Tomorrow. Okay.
I think that's going to be the first indication. I wish I knew,
Scott,
but I know it will.
It is already. This policy is already draining the pockets of Americans. The money they have in their pocket or in their bank account, if they're unfortunate enough to have one, are losing money again. We just had a segment on inflation, how low it is, but in fact, it's high enough, so it's killing a lot of the savers.
Yeah, savers are getting smoked, David. The only way you're making money in this market, either stocks or even if you are bonds, like John said, with high yield, is if you're taking risk. Shouldn't be taking if you're in retirement or so forth. So it's solely distorting markets, and the Fed is political. Remember, they promised us 4 rate hikes this year when they had that stinker of a rate hike last December, and they saw what it did to the markets. They're afraid to do it now ahead of November 8th.
Right. And, Jonathan, there's another scary scenario. It may not happen, but a lot of companies have been borrowing at this low rates to buy back their stocks. Companies are paying out 112% of their earnings right now because of all the money they're borrowing and paying back in terms of dividends and stock buybacks. That's dangerous, is it not?
Yeah. Yeah, David, and those are exactly the bubbles that you're alluding to. You know, there's no such thing as a free lunch. And just as the economic policies in the early part of the 2000s influenced the later credit cycle and the real estate implosion, I think we're going to see the same type of things today. Bubbles are being cooked. We just don't know where and when exactly they'll pop.
All right, Donald Trump unveiling his plan to tap into American energy reserves earlier today. Listen.
America is sitting on a treasure trove of untapped energy. Some $50 trillion in shale energy, oil reserves, and natural gas on federal lands, in addition to hundreds of years of coal energy reserves. It's all upside for this country. More jobs, more revenues, more wealth, higher wages, and lower energy prices.
Ooh, Scott Martin, I covered energy forever. He is singing my tune there. What do you think?
I'm a big fan of it, Melissa. I mean, exporting oil would be excellent, having an actual energy policy that was favorable for workers. You know, we've destroyed a lot of the energy supply and resources in this country by just treating those sources so terribly. So actually to have the benefit of the workers in mind and the benefit of economic growth in mind is exactly what I think this economy needs to get going.
Jonathan, we don't want to put coal miners out of business, as Hillary Clinton promised to do. At the same time, more supply drives prices lower. There's always that ironic negative externality.
Sure, of course, but that's the free market, and that's what we want, Melissa. We want lower energy prices, and unfortunately, we've had an administration that's been so dead set on getting energy prices higher. That's all this hatred against fossil fuels has done. It makes it more expensive to use energy. So any loosening up of these regulations, it's not just good for jobs, it's good for the economy short and long term. It's a plus.
All right, well, we have some more breaking news. This is troubling news. More trouble for Yahoo. The company has confirmed a massive security breach by a state-sponsored actor of its service. This is a hacking that has resulted in 500 accounts being breached. Now, Scott, 500 million accounts, forgive me. That's a lot of information. Somebody is sitting on a gold mine. How do you think that information is going to be used?
Well, David, there's a lot of stuff in there that they could use. I mean, you could talk about personal information going to credit cards, you know, things that are being opened in people's names that they don't even know about. I mean, Yahoo's in a big problem here because, you know, their content, a lot of the visitors, a lot of the new users that are created on Yahoo, those things are just in decline. In fact, I don't know anybody that's opened a new Yahoo email address since I was prom king. I mean, that thing is a dinosaur. It's not. I know you have an email. I know you have a Yahoo email address, David, or you're moaning at I was prom king. But either way, Yahoo is past. Google and Amazon are the future.
Jonathan, 500 million accounts. There are a lot of prom kings in there and queens. The point is Verizon is just about to complete its purchase of this division of Yahoo. Who pays the price for this? There out of 500 million accounts, there are going to be a lot of lawsuits, all kind of trouble for Verizon. But does Verizon pay for it, or does it go back to Yahoo?
It's still being determined. And in fact, this breach occurred, as we understand it, in late 2014. The good news is, as I understand, no financial records and specifically were stolen. But David, you're right. Given Yahoo's impending merger with Verizon, this raises a whole lot of questions.
Yeah.
I think the biggest, though,
this could be an albatross for
sponsor?
Verizon. I mean, it looked like a cash cow, but it could turn into an albatross.
There's always breaches, but who is the state sponsor here that infiltrated here? I think that's the bigger question for firms looking forward.
Another question. My bet is Romania, but that's just my bet. I don't know. Guys, thank you very much. Appreciate it. Melissa.